Good morning. This is George Kachuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor. Here we are, the first week in February, and the market's pretty much spilling into a correction. In fact, I'd say it isn't a correction. Last week we got another distribution day on Wednesday on the NASDAQ. That's a day of heavier selling on heavier volume than the day before. Gives us about 8 days over the last 5 weeks. That's a lot, and that tells you that things are not good in the market. Actually, out of the last 7 sessions on the NASDAQ, 5 of them were heavier selling. Now, the market did try some rally attempts on Tuesdays and Thursdays of last week, but that was on lower volume. And then Friday, it tried to muster up a rally. The volume was higher, but at the end of the day, it closed lower. However, looking at the NASDAQ, it did close right above 4,100, right above its 50-day moving average. So that could be viewed as a positive sign. However, if you look at the S&P 500, which is underneath the 50-day moving average, it's testing those lows that they made last week again this morning. The Dow also making new lows this morning. Dow's down about 150 points now. The Dow looks the worst out of all the indexes. Now, however, one thing as we go forward, you need to be very cautious because we are correcting. And if the correction gets worse, eventually I'll take all stocks down with it. However, on the positive front is stocks that reported great earnings, they gapped up and were hitting new highs last week. We saw this in stocks like Google, Facebook, Kihu 360, Alexion Pharmaceutics, Biogen. So a lot of stocks are still acting pretty well and moving to new highs. Netflix is another stock across the $400 level. So kind of a little bit of a mixed signal, but generally speaking though, a lot of caution in this market. Now, pretty much just a technical correction. If we look at the fundamentals, some of the fundamentals still look pretty good. Economic picture still comes in mixed. However, out of about half of the S&P 500 companies that reported earnings so far, 70% have beat earnings so far. And now analysts, they're looking for about a 7.6% earnings growth for the fourth quarter, and it looks like they might be closer to 9%, but right about 8.9%. Now, estimates for the first quarter earnings are about 4.5%, so it's a little bit lower, but still it's a positive growth. Now, one thing you also want to look at, so as the market's correcting, you probably want to stay off buying anything going long in the market, but you do want to look at which industry groups are acting best. So if you look at Investors Business Daily, they track 197 industry groups. And if you take a look at the top 40, you have about 11 of those are from the computer and software industry groups. You have about 7 in the medical sector. You have about 3 in leisure, 3 in transportation. So here's where you really want to focus your attention, see how those stocks act. And when we do get a sign that the market turns, you do want to start looking at these stocks, namely in the medical sector. The biotech and drug stocks are still very strong, and the internet sector still is very strong. However, now is not the time you really want to be trying these because, like I said, if the correction gets worse, these stocks will eventually get taken down as well. So, as always, let price and volume be your guide. What we're looking to do is we're looking for a big volume follow-through day. That's a day that will come about 3 to 4 days after, actually about 4 to 10 days after we think we would hit a bottom. Last week's low on the NASDAQ was a little below 40.50. As long as we don't undercut that, that's going to be our day one of a possible rally attempt. However, this morning we may be touching right below that. So good luck trading. And as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. And good luck.